Gem International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
We're speaking with Ted Dixon, CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service. His website, CanadianInsider.com. Welcome back to the show, Ted.
It's great to be back, Jim.
Whole world is watching, as they like to say, with Donald Trump. Is he the biggest risk to business right now?
I think so. Donald Trump very much is surprising the world with his, not just his tweets, but to the astonishment of many, he's actually delivering on his promises. And, what could be a bigger risk for, the comforts of, the elites in the world that are, used to politicians more or less playing down the middle of the road and sticking to the, to the status quo. But lo and behold, Mr. Trump is actually doing what he said he was going to do for the most part anyways. We only have now a couple of weeks of track record, but so far he's not wavering in terms of what he wants to try and get accomplished. Now, of course, he's getting done sort of what he can do on executive order when he really wants to start doing things like taxing goods at the border. That will require some legislation with Congress, so that'll be a little trickier. But he is doing what he said he would do, and that is probably going to upset a few apple carts along the way, and so he is the biggest risk. We put out a report in the beginning of January, which your listeners can download for free. It requires registration on CanadianInsider.com, but if you register, you can get the report for free, and it's called it's our January Top Gold Report. Insurance for a yo-yo world. And really, I think that's how we're going to have to view gold going forward, as insurance. I think that we're not at a point where, some of the more doomsday scenarios are going to unfold in the U.S. in terms of going over the fiscal cliff. Gold at this point, should not be a bet on everything falling apart in the United States. It should be it should be an insurance bet that what happens if Donald Trump invokes some policies that send the stock market collapsing, inflation flying. That would be the role for gold, and it really is a what if. It really is a what if world now. And what if Donald Trump manages to bring in a border adjustment tax of 20%, like it was reported in the Wall Street Journal just on Thursday that's what they're thinking about now. I don't know if the Wall Street Journal just made that rate up. They were looking at it in relation to what the proposed corporate tax is. But I can tell you, if the United States were to try to bring in a border adjustment tax of 20%, that would be a declaration of trade war. And you could do a border adjustment tax in probably and make it consistent with the WTO, but I don't see now. I could be wrong. Maybe you'll have some trade specialists on your show at some point that could correct me, and I would be happy to be corrected on that. But from what I've read on the U.S. formula that they're looking at, they're going to have to implement it in a very sophisticated way that meets WTO rules. And slapping a 20%, I just don't see how slapping a 20% border tax and a border rebate for exports would manage to qualify under the World Trade Organization. But, we will see. We will see where that goes. That's all speculation still at this point. But that's the world now we have to live in. We have to kind of speculate what Donald Trump really means and what he's really going to do. We will get some certainty, and that's a good thing. The Republicans control both houses of Congress, so there's no excuse for them not being able to put some legislation up and try to get it passed, since they've got the numbers now. So it is very risky in terms of what the implications are for markets. But let's face it, the trend since he's been elected, and actually even before he was elected, the economic trend globally has been pretty good. So we've had a rally in the market. We've had a nice rally in Canadian stocks. Had a nice rally in the Canadian Insider Index, which looks at growth and value stocks preferred by insiders. We've had a nice rally since the beginning of the year. It's up 2 or 3% so far year to date, and a lot of that is due to not only optimism in the U.S. that they're going to have less government regulation and a pro-growth administration, but also reflects the fact that China is growing again. And when I say growing again, we know, according to official statistics, they always grow. But this time there's some other data points besides the official statistics that seem to back up that they've actually, have had an uptick. Yes, one can debate, but it's not real, in that it's all been driven by debt and that it's not sustainable. Those are all fair points to debate. But the fact of the matter is, your economy has improved. You can see that just in what's happened with the coal price. It's the coal price has been on a tear lately, just, heading in now to Chinese New Year's. And by the way, happy Chinese New Year to all your listeners. The coal price has almost doubled in terms of the near-term contract on the Dalian exchange, and the iron ore price is up 50%. Just since summer. So, you don't get those kind of numbers if the economy is going down the tube. So it's not just Donald Trump's, America first, lower taxes, lower regulation. China has to get some of the credit for the rally we've seen in Canadian markets recently.
With Trump also ripping up the TPP agreement, does that give Canada more access to Asia because our government's in favor of it?
Well, there's an opportunity to do something, and Australia seems to be open to doing a TPP ex-US. And when I mean ex-US, excluding the US. And the numbers that I read from different reports, including CD Howe, suggests that, if Canada played its cards right, we could actually do better in a TPP without the U.S., mainly because of two reasons. One, the U.S. scored a huge victory for their intellectual property sectors under the TPP, and, software and biotech. Well, that was great for them, but it wasn't so great for us. Think generic drugs, and think that we don't have as many patents in Canada as they do in the U.S. So this was a big win for the U.S. And Donald Trump has just apparently decided he's not going to sign on to that. So and there's more politics behind that, the calculation on his part, than anything. But not a lot of people in those industries voted for him. But nevertheless, the fact that the TPP is dead shouldn't. I'm sure it's not causing any sleepless nights by policymakers in Ottawa. They should be awake, though, trying to figure out how they capitalize on it. And so there is a potential opportunity. Just it depends how many countries want to play ball and under what terms. But we could potentially turn that into a positive.
We'll have more with Ted Dixon right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ted Dixon. Ted, before we went on air, we were talking about the potential for gold and why gold does have a lot of promise for the same reason that we were talking about other businesses and their connections with Donald Trump.
Well, I think investors have to look at the gold as an insurance, as we mentioned at the beginning of the show. And the gold price is going to be moved around by a number of factors, and ultimately supply and demand. Take India out of the equation because that was a big kind of out of the blue event where they decided to basically stop using their large bills to try and combat tax evasion. Take India out of the equation because I think it can only get better in terms of what's going on there. The key factors that we talk about in our report, which you can download again at CanadianInsider.com, our January stock report, are two things. First of all, you've got what we focus on are real interest rates. That is the nominal interest rate. We know the posted rate minus the inflation rate. And why that is important is because if the real rate is going up, that usually means there's lots of real opportunities in the economy, less need for gold, less need for insurance. You should be out there building businesses, investing in the real economy. If the real interest rate pulls back, and it has been pulling back from its highs since the Trump election, and looking at the sort of the shorter term, the 5-year real term rate, it really hasn't been able to rally in 2017, and in fact, as of Thursday, was basically back down to zero. So that is gold positive, even though Thursday gold fell. But in general, if that real interest rate cannot move up, then gold should find some support. But it has been volatile. But it's really important for your listeners to follow the real interest rate, because if it starts to move up, if it moves higher again, gold will come under pressure more than likely. If inflation is driving interest rates higher, then it's a different story, and you may get a combination of the two. But keep an eye on real interest rates, and we talk about that in our report. But then, of course, the other is geopolitical, geoeconomic. Now we can call it geoeconomic. I don't think people don't really haven't really called for geoeconomic risk in the past, but now we do have the risk of trade wars, like we said. I don't see that as a base case. I think there's an alternative scenario where the Trump rhetoric and moves are posturing more than anything, and we end up getting some better trade deals. I mean, for example, if the Trump administration takes a hard line to China and is successful at getting China to open up its markets, then that would be great for everyone. It would be great for Canada. It would be great for the world. I mean, China is a very, very, very closed economy still, and it's just not a fair ball game going into China. Domestic players have such a huge advantage, particularly in specific industries. For example, in my business, Ink Research, we cannot do anything in China basically, and anybody in the financial sector knows that we just can't go in. We're not allowed to go in, and that's not really fair when people from China are allowed to come in and flip homes here, left, right, and center, and do whatever they want. So there's an asymmetry there, and I think. That's a lot of the resentment that's built up over the past few years. That gets the crux of the matter. But I think you're going to see the Trump administration try and force China to open up. Now, the risk with that is China pushes back, and they have a number of levers they can push back, and you could end up in some very very uncomfortable geopolitical situations, and that would be gold positive. If the Trump administration is successful in getting a trade deal with China, that would be gold negative. But we are a long way from that, Jim, and we are many, many years from that. So there's a lot of water under the bridge, and to go before we could potentially get to that point, and we may never get to that point. And using gold as an insurance along the way, and you view it as insurance, and you won't get upset if it goes down $200 or up, and if it goes up $200, you probably will get upset because that means things in the world aren't going so well. So you want to have gold as an insurance policy for in a yo-yo world, and you can use gold miners as well. You have to be, of course, very prudent in terms of the gold stocks that you look at and the like, but I think gold will find its place in more and more portfolios, but it's going to take time for a base to build because you do have these interest rates moving higher. That's going to limit gold's upside, from any sort of euphoric move. I don't expect to see any euphoric move, euphoria driving gold. I expect if gold goes higher, it will be going higher on fear.
The Dow Industrial Index topping 20,000 for the first time since Trump was elected. The TSX financials have gone up 11.5% or more, and the Dow Industrial's up at least 9%. So far, the stock market really loves the guy.
Well, again, there's two factors going on for the stock market. For example, in Canada, the Canadian Insider Index has made 6 new all-time highs in January alone, and that's 50 growth and value stocks preferred by insiders. Well, sure, part of that is riding off the coattails of Donald Trump, but a lot of it is riding off the coattails of China, and in particular stocks like Teck Resources and First Quantum Minerals, Hudbay Minerals. These are being helped by tailwinds out of China more than they are from tailwinds from Mr. Trump. On the other hand, you've got the oil patch, which is benefiting not only from better improved sentiment with the approval of the Trans Mountain Pipeline, which would serve China, but also Mr. Trump's pro-Keystone position and the prospect of a stronger U.S. economy. Stronger demand for Canadian oil, petrochemical products is giving a boost to the domestic Western Canadian economy, at least stocks geared to that economy, which are anticipating better times. So, yes, Donald Trump is helping the markets move higher, but it's not all a Donald Trump story.
The Port of Vancouver has reported a big upswing in traffic. Is that good news for all of Canada?
It's great news for Canada, and this is something that the NDP don't get, and it's why, even though, and I'm talking about, well, never mind the federal NDP, but the BC NDP, the BC NDP somehow forget that we have a port industry, a maritime industry in this province, and that that we have got a pretty good record at moving goods, and that includes crude oil out of that port of Vancouver and other ports. Yet, the BC NDP have basically declared war on the port of Vancouver with their campaign platform. And, despite all the gifts that the BC Liberals send to the NDP provincially, the NDP continue to, basically campaign against the Port of Vancouver and various types of exports, including, the Kinder Morgan pipeline. So the NDP are battling against a really critical development for Canada, and that is the Trans Mountain Pipeline. It's a strategic development, not only economically, but for our climate change policy. And I'm still, I'm not scratching my head as to why they're doing it. I know why they're doing it, because they're pandering to the environmentalist vote, and they're scared of their shadow, also known as the Green Party. And that's no way to display leadership and to offer, an alternative to the voters. I mean, the BC NDP are the official opposition. They have a duty to the voter to provide a platform that makes them competitive in the next election. They can't just rely on mistakes made by the governing party. Every governing party makes mistakes, and the BC Liberals have made their fair share. But you know what? I mean, the BC NDP are not even in government, and they make, major mistakes, and right now, their opposition to Kinder Morgan is essentially opposition to a critical strategic economic climate change initiative that is in the best interest of Canada, and one can argue the point, but clearly in the best interest of British Columbia, given the money that the BC government has extracted from Kinder Morgan. I mean, we had the BC NDP going on about how it's only pennies. Excuse me, $1 billion. If John Horgan thinks that $1 billion is pennies, what does that mean if he gets in power? A penny here, a penny there. You can imagine what kind of government spending we're going to have under the NDP. So, Jim, you hit the nail on the head. The Port of Vancouver is such a critical asset for Canada, and it just doesn't seem to resonate with a number of policymakers, particularly on the left. It's something they wish would go away. We could all have a beach. We could have a ring road of beaches in Burrard Inlet. Well, that's not what built this province, and it's not what's going to keep the province going and putting food on the table. It's a real critical element to our economy and the Canadian economy, and I think it's going to be a big issue in the election, but it's not going to be won in the Lower Mainland, where you're going to have people who will protest Kinder Morgan. It's going to be won in the interior British Columbia who want to see that project go through, and who will end up not voting for the NDP again. So it's this is like the previous election all over again, and eventually, the NDP may learn, or expect, if they lose this election, which I think they will, barring a rain shower of gifts from the BC Liberals, I think you could see a splintering of the left and a new party form that's serious about challenging the BC Liberals. Because the NDP, if they blow this one, they'll have no excuse, and they will have actually, I think they will owe British Columbians an explanation as to why they should actually be the official opposition if they're not prepared to be serious about economic development in the province.
Well, I think Hillary Clinton forgot her husband's famous unofficial slogan, "It's the economy, stupid." And anybody who goes into an election these days without thinking about the economy first is going to be in trouble.
Well, perhaps the NDP have missed the message from the United States and Brexit, and it's going to be a hard lesson for them to learn in May. Now, they do have a government that is a little accident-prone here on the housing file, and they are vulnerable on the housing file. But the question the NDP have to understand is, just because the BC government is vulnerable in Vancouver doesn't necessarily mean they're vulnerable in Williams Lake on the housing file. And they have to win. If you're going to beat the BC Liberals, you have to win places like Williams Lake. And I just don't see anything in the BC NDP platform or strategy that's going to appeal to resource areas of the province. I just don't.
Ted, always a pleasure speaking with you.
Thanks very much, Jim.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, his website, CanadianInsider.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Questions can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.